Hello and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. The Dow, the S&P 500, and the tech-heavy NASDAQ all fell through mid-morning trading Tuesday. The downturn came after Apple warned that the coronavirus could negatively impact its quarterly revenue. Apple stock fell over 2% Tuesday after it said that it won't hit its targeted sales range between $63 billion and $67 billion in the first quarter. The firm said that the virus has slowed iPhone production and weighed on demand in China, which is a key market. Apple is the first major U.S. company to cut its revenue forecast on coronavirus-based setbacks, and now Wall Street and investors will be watching closely to see who, if any, might be next. Apple's warning could also put pressure on major growth tech stocks that have seen their valuations stretch. Apple is trading at 10-year highs in terms of forward 12-month earnings estimates at 22.3 times forward Zacks estimates. Meanwhile, Microsoft is trading at 30.5 times forward earnings. This also marks 10-year highs for the fellow trillion-dollar market cap firm. So the question is, when will the valuations return to more normal levels? Despite the broader downturn, Tesla shares climbed again Tuesday, up 6%. This continues its insane run for Tesla stock, now up over 270% in the last 6 months and 100% in 2020. The positivity comes as investors seem more convinced of electric vehicles' futures. Last Thursday, Tesla announced that it planned to sell $2 billion worth of new stock. The news came just a few weeks after CEO Elon Musk told investors that a capital raise wasn't necessary during its fourth quarter earnings call. But Musk is on a mission to expand Tesla's vehicle offerings and its global reach from Europe to China. And Tesla's costs can be unpredictable at times, especially as production ramps up. This is likely why Tesla plans to raise $2 billion through a new stock offering. Therefore, their thought is walnut strike while the iron is hot. So looking ahead, Tesla also expects to deliver at least 500,000 vehicles in 2020, up 35% from last year. And our current Zacks estimates call for Tesla's fiscal 2020 revenues to jump 30% higher, with 2021 set to climb another 32% higher to reach $42 billion. These would both blow away the electric car maker's 15% revenue growth in 2019. On the earnings front, Walmart stock climbed Tuesday morning even though its Q4 earnings fell short of estimates. Overall, the company reported mixed quarterly results, which included the vital holiday shopping period. The company posted sluggish holiday sales. Still, Walmart US saw its quarterly comparable sales jump 1.9% and its e-commerce sales surged 35%. This comes as the retail giant has expanded its e-commerce business and rolled out multiple delivery and pickup offerings to meet growing consumer demand and fight back against Amazon. The stock is now up 16% in the last year. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks Rank #1 Strong Buy stock. Welcome back to Free Lunch. Today we're breaking down why Applied Materials is a Zacks Rank #1 Strong Buy stock. Applied Materials is a leading semiconductor equipment company, and executives expect the firm to benefit from the continued expansion of the big data age and see the emergence of AI and other new tech as key long-term growth drivers. Applied Materials also just topped our Q1 fiscal 2020 earnings and sales estimates last week. So let's see why it appears to be worth considering as part of a larger semiconductor industry comeback this year and beyond. As always, I like to start with a look at the company's website. As I mentioned, Applied Materials is a semiconductor equipment firm, so they help companies who make semiconductors make those semiconductors. It's a little more complicated than that, but that's the simple basic pitch, and obviously anyone really interested can dive in and take a deeper look at Applied Materials. But we're going to look more at some of the technical stuff to go ahead and see why Applied Materials might be worth considering. We're going to start by a quick look at the stock price's performance over the last several years, and then take a look at some growth and valuation and other stuff before we take a look ahead at what to expect. So we can see that this is over the last 5 years. We can see that AMAT, which is their ticker, is up 170%, which outpaces its industry's average of about 143% climb. And then we'll just take a broader look over the last 10 years or so, just to give people a sense of the run that the company is on along with its industry. So it's up about 120%, and we can see that a lot of this movement comes at about the start of 2013. And then if we go to the last year or so, we can see that the stock is up about 65%. And it climbed initially right after it reported its Q1 2020 earnings results. We can see that right here on the 12th of February. And it's had a little bit of a pullback recently, and that actually might set up a better buying opportunity for anyone interested in the stock. So along with its strong price growth, we can see that the stock remains trading at a discount compared to its broader industry, as it has over the last 5 years. It's trading at about 15.6 times forward 12-month Zacks earning estimates, which was well below its industry's average of about 20.4 times at the moment. And then if we compare that just to the broader S&P 500, we can see that it's still trading at a discount compared to the average of the S&P 500, which is solid for a company in a growth area such as the semiconductor space. And now the last thing I want to do is take a quick look at their income statement just to show the growth. So the stock price has gone up, but 2019 was actually a rough year for the semiconductor market in general. We can see that in 2019, their sales were down about 12.6% after they were up 13.7% the year before. And the semiconductor market in general has been historically cyclical, so the stocks were bought up heavily at the start of 2019 based on beaten down valuations, and Wall Street knew that a return to growth was coming. So the last 2019 once again was down 12.6%, but they had some solid growth starting in Q1. So now we're going to go ahead and take a look at what to expect going forward. So we can see that Q2 2020 we're calling for about 22.5% top line growth, another 19% growth in Q3, for overall growth of about 15.3% in 2020, and then another nearly 14% growth in fiscal 2021. So a return to some solid top line growth after a little bit of a setback over the last year. And then on the bottom line, we're calling for roughly 50% growth in Q2, another 47% growth in Q3, and this is in terms of adjusted earnings, for overall growth about 35% in fiscal 2020, and then another 15% growth expected in 2021. And then if we go here, we can see just how much more positive its earnings picture has looked since it reported. We can see that everything except for Q3 2020 has their earnings estimates have trended all in the right direction. 6 for 6, 5 for 5, 8 for 8, and 6 for 6 here. And we can see that, so overall, last week we were calling for their 2020 earnings on the full year basis to be $3.82 per share. Now that consensus estimates all the way up to $4.10 per share. And then for 2021, it jumped from $4.48 per share to $4.72 per share. So some really solid upward earnings estimate revision trends. And we can see the company is beat over the trailing 4 quarters on the bottom line, which is always a good sign. And on top of that, we should note that the company also pays a dividend. Its yield is about 1.3% at the moment. Nothing super strong there, but a solid thing to have as part of a growth industry for a company like Applied Materials. We can also see that its semiconductor equipment, wafer fabrication industry rests in the top 2% of our more than 250 Zacks industries. So we have some of it a rising tide situation there. And then we also have an A grade for momentum with Applied Materials. So that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Also make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.